So when you're a bit conservative, you're not necessarily you're kind of limiting the downside, but when you limit the downside, you're also limiting the upside. It's really about the quality of your team, the quality of your leadership, the quality of the environment.
All right, hello everyone, and welcome to the Deal Maker Show. So today we have a very exciting guest. A guest that is doing it. So talking about scaling, building, financing. I mean, you name it. I think that it's going to be quite interesting, and that you are all going to be learning quite a bit. So I guess without further ado, I'd like to welcome our guest today, Asesh Sarkar. Welcome to the show.
Thank you so much.
So originally born and raised there in the UK. So how was life growing up?
Life was good. I kind of born in a city in a place called Leicester. Um, was had an older brother, 12 years older than me, so he left for university, and so then it was with me with my parents, and then kind of had a good kind of a good time.
And you definitely studied quite a bit of business, not only for undergrad, but then also you did your MBA and then this whole thing around consulting. I mean, you've been quite a consultant. So why studying so much business and why going into consulting?
I guess I always wanted to be an entrepreneur, and so I thought I would kind of start with a degree in business, and that would kind of help. And then during the early years, I never quite landed on an idea, and so I thought actually if I become a consultant, that would help develop some of the kind of core skills, skills needed. And then what I really found is that because we were doing different projects in different sectors, you work at quite a senior level. It allowed me to experience a kind of lot of good things kind of early on in career. So I think I was kind of pleased. I was 35 when I started my entrepreneurial journey, and so at the time I was like I was doing well. I kind of enjoyed it. I became a partner at a consulting firm. But my heart was always in being an entrepreneur. But with the benefit of hindsight, I'm kind of very pleased I had that grounding, and that I kind of started an entrepreneur journey when I did.
So why do they say that consultants make great entrepreneurs?
It's a good question. In general, to be honest, I'm not sure they do. In that, what I find with consulting is that quite often you're focused on very big organizations. Quite often you're navigating politics of the organization. You're trying to kind of and in many ways you're kind of playing a corporate kind of a corporate game. And so for me, I was good at playing the game. I enjoyed it. I was able to do kind of progress within that system. But actually, when you're a startup, and then quite often when you're in a corporate, you're very far from the customer. Whereas actually the opposite is the case in a startup, which is you pretty much start with the customer, you start from the ground up, and you kind of build outwards. There's not enough people to really do any politicking with. You don't have a association with a big corporate that can help you, so you pretty much kind of start. So I found, and actually one of the things whilst I was good in the corporate world, for me, I really enjoy business, and for me, business, when you're doing it in an entrepreneurial environment, is really what it's about for me, as opposed to some of the, when any organization becomes big, navigating, you focus on the business of navigating organization as a focus, as opposed to the business of business. And for me, what I was really keen on is not just navigating an organization, but actually core business, understanding users, scaling, and so on. And so I was pleased to kind of make the transition when I did.
And what was that process like of really coming across the idea of salary finance? I mean, you, let's say, are doing all these years, as a consultant. Then at 35, is really when you started the business, as you were saying. But what was that process from identifying, that need or that problem to actually taking it all the way across, incubating it and bringing it to life? I mean, perhaps what was that process, that journey like, and that specific event that happened that triggered and that push you over the edge to say, okay, screw this, let's do this?
Yeah. So I had a couple of false starts, and so a couple of times I had come up with ideas, done it on the side of the desk, and it kind of made me realize that it's not just about a great idea. And actually, I had then seen in future years, other people take similar concepts and actually become very successful with it. And so there's a general feeling I had, which is, if you had, it's not necessarily just the quality of the idea, it's also the quality of execution, and that generally doesn't happen off the side of your desk. And so, for me, it kind of concluded that if I was ever going to be an entrepreneur, then I wanted to do it in a big way, and that I would need to kind of commit to it. The kind of real pivotal moment for me was I just become a partner at a consulting firm, and worked very hard to kind of get there. And then I kind of really concluded that if I was going to be an entrepreneur, really now was the time, because once you get into a partnership, actually you need to do a good number of years in that partnership to kind of gain equity value. There's kind of no point being kind of half in it. And for me, what was going to happen is every year you become a partner in a consulting firm, the kind of opportunity cost becomes bigger, and then I knew it would just get harder and harder. So I thought, okay, look, I've become a partner. Nice landed, nice draw a line in the sand. And at the same time, I really kind of developed the idea around salary finance, and so I had the idea. I felt like I had, achieved something, a nice kind of milestone in my corporate career. And then I was also very fortunate to be able to raise capital on it as well. And so it kind of felt like the three of those things meant for me it was the right time to kind of make that plunge. Whereas before, either it wasn't quite the right idea, I wasn't confident enough to leave on it, and I was unsuccessful in raising capital at the time. So yeah, the kind of the triangle of great idea, right moment, kind of personally, professionally, and funding were the key things.
So in this case, I mean, we're talking about a good idea. I mean, were there any steps that you took in order to validate it and to make sure that you were taking the leap of faith, perhaps, and through a tunnel, that there was cheese at the end of the tunnel?
Yeah, so I would say a lot of it was, instinct driven, and a lot of it, subsequently luck driven. And so, the idea, the business I run, Salary Finance. So, I guess two things resonated. One was analytical reasoning, and the second was kind of, emotional reasoning. And so, ultimately, and then behind all of this was a line of thinking I'd been developing over a number of years, which was around this concept of business with social purpose. And then increasingly, what I could see was in the not-for-profit world, actually, a real long tail of not-for-profits, good intentions, definitely doing good, but not necessarily scaling. And a general kind of halo effect if you work in a not-for-profit, that you must be great. And then I kind of saw lots of people in the commercial world, really high talent, achieving brilliant things, but the outcome of that, again, not necessarily delivering kind of great stuff for the world. And so I kind of thought about this kind of concept of where you try to align both, where you have the best talent working on really important things, commercially viable, but also, with an eye to actually, from a society perspective, delivering something of value. And it just kind of struck me that, for me, the worlds of non-for-profit and commerce didn't need to completely operate separately, that there could be a Venn diagram where certain ideas would operate in the middle, and it would benefit everyone. And so within that, when it came to consumer finance, I guess kind of two things happen in parallel. One is, I have two children. We have a nanny, and it just shocked me how hard it was for our children's nanny to get access to finance. And in many ways, I felt very guilty. I worked in the city. I worked in banks as a consultant. I had loans. I would pay 5% for those loans. My children's nanny would work very hard because my children are very active. But she couldn't access bank finance. She would be, using high cost credit cards, payday loans, and so every month we would pay her, but a significant portion of income would just go on this kind of high cost credit. And so I could kind of see how inequality happens, which is, basically for me, someone that was relatively high paid and getting low, access to capital, someone that was more middle income, they would find it much difficult. But then equally, on the rational side, I could see from working at banks that it wasn't necessarily bad actors. It weren't the bank saying, look, these poor people, let's make as much money we can from them. Basically, they're just looking at the economics. They're looking at, the risk and pricing in the risk. But what I could see is two I was kind of sat in the middle of these two things, which is one is I could see the impact a lack of finance has to someone in a middle to low income kind of setting. And I could see on the banks, there weren't necessarily bad actors trying to do anything wrong. And I could see how this was kind of normalizing to kind of bad effect. And then I kind of take it one step further around looking at, there is no good or service in the world which has this dynamic where the less you earn, the higher price you pay. It's kind of like going to a sandwich shop and the rich person paying £1 for a sandwich and the poor person paying £10. Like it just wouldn't be acceptable. But when it comes to money, it's kind of fully normalized. So essentially, what I'd done for my children's nanny is I'd given an employee loan. We paid off her debts. I collected a small amount from her paycheck each pay period because I knew I was going to get paid. I didn't, I obviously didn't charge her any interest, but I kind of got kind of comfortable with this concept around as an employer of one, I had made a real difference for her using the security of the paycheck. And then I thought about, okay, what about if we do this on a much bigger case? What if we work with much bigger employers? Those employers offer their employees financial wellness benefits using the fact that they know they're employed, they know how long they've been there, and they have access to the payroll, so they become top of the payment hierarchy. Um, and then it kind of chimed with my business with a social purpose because my case to employers would be that look, your employees are really suffering here, and you can help them. Those three kind of things came together. The emotional, I could see, how helping my children's nanny had made a big difference to her individually. I could see from a bank perspective they had got into this cycle of a regressive model, and I could see how by working through employers we could really change the economics and do something at kind of scale. So yeah, those three things coming together, helped give me confidence that the model would have, at least some merit giving it a go.
Very cool. And you were talking about raising capital too earlier. How much capital have you guys raised for salary finance?
So over the 4 rounds now, we've raised just under £100 million.
Okay, got it. And how has it been like the fundraising journey for you?
It gets easier. So I would say, particularly in the UK, raising seed capital is very difficult. It's just in kind of very kind of short supply. So salary finance operates across the UK and the US. And so yeah, what I see in the US is just a lot more equity available for kind of seed stage. I was lucky when it came to seed stage that I'd established some credibility in the market. And so I had a combination of VC, angel, and then ultimately who I raised capital from at the seed stage was an organization called Blair& Shalcott. And they're kind of what they term venture builders. And so they are kind of more operators. They do fewer transactions, but much more deeply involved in it. And what I liked about them is a big focus on being operators rather than financiers. They understand the numbers, but where they really excel is being good operators. And for me, with my kind of consulting background, I quite liked the kind of the operational, people who had built lots of companies themselves, and I could really kind of really resonate with. So yeah, getting the first, and as I said, with previous ideas, I had been successful in, unsuccessful in raising money. So for this one, I had a good fortune of having a range of options, but very difficult. I guess easier as you kind of get further into your career. And then for me, I kind of chose the kind of venture builder route over above venture capital or angel capital.
Got it. And so for a business like this, I mean, I would assume that you also have some debt, correct, to be able to put it into the operations. So how much have you
Yeah,
guys raised on that front?
yeah. So we've raised, kind of well over £500 million now.
Half a billion. And that's, like how do you put that into perspective? What's the raising equity versus raising debt? I mean, how that all comes into place, and how should an entrepreneur think about that?
Yeah, so equity, I guess, is the kind of operating capital of the business, and that's kind of really, yeah, I would say particularly in the early stages. Whilst we have raised a lot of capital now, we have done it in stages, and pretty much, you have all of these kind of proof points, and so the first proof point for us was, can we win a client? Does this proposition resonate? Do executives in big companies care enough about their employees to solve this? And then we kind of got comfortable with that. Then the next kind of proof point was, okay, we've got into some employers, but do employees need this product? Are they going to take it up? Then we got comfortable with that. Then we got like, okay, hey, when we lend these employees money, are they going to pay us back? Is it going to work economically? And then we kind of got comfortable that, okay, yeah, so that's all working, but can we scale it? It's great that it worked in two companies. Can it work in thousands of companies? And so every time you get more confident and you prove these proof points, you're kind of ready for the next stage of equity. And I would say, me personally, um, I take when I take money in from an equity investor, whether an institution or a private individual, for me, that's their money. They've worked hard for it, and so I kind of take that with a lot of responsibility. So I never look to raise more than we need to get to the next proof point. Up until where we are now, where we have many, if not all, of the proof points, and now it's really a kind of kind of multiplying stage game. On the debt side, it's a bit different, and so when it comes to funding consumer loans through debt, at the beginning, you have no data, and people who work in traditional debt finance, they love data, and so at that stage, you have to work pretty hard. And actually, during the beginning stages, we actually had to use equity to do our first kind of debt funding. And then fast forward to kind of get to where we are today, which is, we've done £500 million in employee loans using employment data, collecting repayments on payroll. But basically, one of the, if not the best performing consumer asset classes, has performed even better through kind of COVID. And so now, when we go out to raise debt funding, there's a queue of people. There's nothing not to like about the model. It's socially progressive. We've got tons of outcome data. It's proven over the cycle. So yeah, as you progress, it's just a kind of a data game at that point. And things get easier on the equity side. Yeah, it's kind of very much around what is the growth levers and how much of those have you proven.
Got it. And in terms of, you were alluding to this, in terms of like scope of the operation, size. I mean, anything that you can share, even like number of employees. I mean, whatever you feel comfortable sharing.
Yeah, absolutely. Yeah, so we have 150 people in the UK. We have about 40 people in the US, and we have about 50 people in India.
Very cool. And then what's in store for salary finance? I mean, if you were able to, let's say, go to sleep tonight and you wake up in a world where the vision is fully realized, what does that world look like?
So it basically looks like, with finance, you have lots of different channels. You can go to your bank, you can go to a neobank, you can go to a specialist. For us, we believe that if you access finance through the workplace as an employee benefit, there's a lot of advantages to that. You cut out the cost of acquisition, so you can pass that on to the employee. There is no fraud. You collect repayments on payroll. You can design it. Lots of people don't get paid monthly like bank products are done. So you can design the repayments to match someone's pay cycle. So for us, a world where the majority of the finance you consume is through the benefit of your employer, where you are getting it as an employee benefit, and just becomes completely mainstream. And so in the UK, for example, we now reach about 3.5 million employees across 600 big companies. So 20% of the FTSE 100, one in four hospital trusts, eight of the Big Ten supermarkets. So it's kind of getting mainstream. So we reach about 2 in 10 working people in the UK. For me, mainstream is when it's in 6 or 7 people of every kind of 10 in the UK, actually can access their primary finance products through the employer as an employee benefit. US, we're earlier stage, but kind of making good traction. And we would love to see kind of similar growth there as well, and then hopefully kind of more countries to follow post that.
Very cool. And one of the typical questions that I ask the guests that come on the show, Asesh, is, I mean, you've been at it now for about 6 years. During your
Mhm.
consulting years, also you learned quite a bit. So I guess if you had the opportunity of going into a time machine and you go back in time and you have the opportunity of having a chat with that younger self, with younger Asesh, what would be the one piece of advice that you would give yourself, your younger self, before launching a business, and why, given what you know now?
This is going all the way to the beginning, or all the way to the beginning of salary finance.
Before starting salary finance.
Yeah, before salary. So Um, I would say, and actually, I probably don't even take this advice today, which is, I am fairly conservative. Like I say, I take a lot of responsibility for the equity capital we bring in, and so when you're a bit conservative, you're not necessarily you're kind of limiting the downside, but when you limit the downside, you're also limiting the upside. And so, for me, when I see the real breakthrough entrepreneurs, that there's also they kind of take that out of their brain in terms of limiting the downside. They're just fully focusing on the upside. And so for me, I've always been a bit more balanced about the two, which is, Salary Finance. We have, we are, for every investor is invested in us. We are a financially very successful business, and everything's progressing as it should. But ultimately, you always want to be 10 times bigger. And so for me, how you can program your mind to protect the downside but really focus on the up is quite key. And then there is a balance, because reality is most startups fail, and so having some downside protection is a good thing, that you're careful with money and all of those types of things. But equally, if you're going to go for it, then there's a lot to be said about being kind of fearless in your pursuit of scale as well.
Very cool. And obviously, you were talking there about the growth and the number of employees that you've had. I mean, what has been, let's say, your biggest lesson around people?
Yeah, it's a very good question. So learned really enormous amounts. And we have, I used to go. We have a leadership coach that comes in to help me and our executive team as well. It's called Legitimate Leadership. Um, and kind of one of the things I've really realized, as you kind of progress, is at the beginning you think a great leader is someone who leads themselves and everyone else kind of follows. And particularly when you're an entrepreneur, you kind of think, wow, I came up with this idea. I have lots of data points, and everyone should just follow. And probably as we got 2.5 years in, and actually, people would talk about leadership coaches, and I was like, look, I have zero time for leadership coaches. Like, I'm doing this in the real world. I don't need a coach. But when we brought a leadership coach in, and we're fortunate to get a real good one, um, it kind of really flipped our mindset around. It's not about kind of you as an individual. It's more about how you can build an organization of people that have the setup to kind of succeed individually, and by them succeeding, kind of you succeeding. And so for me, that kind of real shift in mindset from what can I do to grow this business quickest, to what can I do to have a brilliant group of people around me that are enabled, motivated, understand, have blockers removed, and then you just kind of multiply your ability to kind of really scale. Yeah. So for me, it's been a real change from starting as an entrepreneur where you start yourself, maybe with some kind of co-founders, through to us and actually everything you're doing to drive, through to you get a certain point of scale where actually it no longer becomes about you. It's really about the quality of your team, the quality of your leadership, the quality of the environment, and that's really kind of what sees you through. It doesn't matter how much you work, how good you are, you can never replicate the force of a big organization functioning, on point.
Absolutely. As they say, you can go faster alone, but farther when you go together. So, Asesh, for the people that are
Absolutely.
listening, and watching, what is the best way for them to reach out and say hi?
I'm on LinkedIn, and I'm very happy to connect with people.
Amazing. Well, Asesh, thank you so much for being on the Deal Maker Show today.
Very happy to be here. Thank you for having me.